Maximus Analysis here for November 15th, 2016. I wanted to go over the Amazon trade currently setting up. So want to go and look at the daily. Again, we have a level that we had, the 715.88 that got touched. It's no magic or anything. It's actually a previous high that's getting touched right now. And they're looking good so far. So what we want to do is make sure that we have a strong close for the week. Okay, the strong close for the week. So we're looking at the daily right now, would set up the weekly for a nice hammer type of candlestick at that level. And again, we know that we are looking at these Fibonacci counts, and we can see that we're 6. So again, 5 to 8, that's fine. Nice defined candlestick with some high volume on the previous week. So again, that could be capitulation to the downside. To show you something that gave similar type of volume, you can look here and see around these times again. January gave a big one, given almost like a 1-bar pullback, which I don't typically take. Almost like a shooting star pattern, and flush down another hard one, and then you can see that that was basically the start of the move because you had capitulation in place. You didn't have such a big move down here, but what you did have was the same type of capitulation type of volume seeing here. The reason why I'm saying that it could have been capitulation is because if you break it down and look at an intraday chart, let me see if I have. Okay, let me take the after hours data off, and we'll just keep the regular data on. If you look here, so let's go back to the daily so you guys can visualize it, because again, these things happen, and it is what it is. So let's look, extend right. So this was the close, right? The close was 719. They opened at 729. So basically capitulation volume to the point where it gapped up. Okay, looking at the 65-minute, you could see that this is where they gapped up to. This is where we closed, and they gapped and continued to the upside. Now, what I would suggest, again, it all depends on the time frame that you're comfortable with. You could go either now and you have a defined stop, or you could wait till the end of the week or closer to the end of the week, because you will get a nice move to the upside if you get a nice hammer formation here. Again, we're in oversold conditions and hitting a previous high, so, or a previous high area. Okay, this was only a 3-bar high, and then they continued to the upside. Now, with that being said, we continue up. We either have one or two choices. Again, we know that this has been resistance, and I put that in there before. What we'll also look for is if it gets to 818, and if it's starting to run out of gas, we got to be careful. But again, I don't know if this is the wave 3 or the wave 5. So either way, we'll look, and again, I'm trying my best not to do an analysis paralysis in regards to Elliott wave, because that, again, it can be a deep, dark hole that you can get down in regards to trying to find wave patterns for everything. But we'll keep it simple and say they are layering above highs, and if you even want to use this, currently they haven't even gotten in touch, so they could go touch a little bit lower down to the 700 mark and still be laying above highs. Now, if it breaks up because of how much of a move this was, just again, once it gets to that 818 level, please start to lock in profits and start trimming the position, because I don't want it to get a blow off top and then a lower high, because you can look and say, okay, this is how many points is that? That is almost $370 in a move for the whole of last year. No light feet whatsoever, almost almost a quarter to half the position. So getting this, again, as it gets up into this above 800, 818, I'll be pulling off in the strength and looking for my target to be around this 880 level. In this band, I would be looking, again, I'm not a breakout trader, so then you put your, if you feel like it's $1,000 stock, you put your stops break even at this point, or you roll out some to lock in some profits and go from there. So we'll see how this one continues to play out, but I wanted to do some more in-depth analysis in regards to that. Again, intradays will be a lot different. You also even could go back to the monthly, and you can see this is an area. Again, it's only 2 months back, but they had a huge run from here. You can see layered above highs, even a little bit pullback more into here. But let's look and not get too far into the longer time frames and say, okay, we have 5 weeks down, pull down. Okay, when most people are getting longs. And again, this is the reason why I don't like trading breakouts. You get back in there, you're fine. Again, the trend is bullish. I'm just telling you, just be a little bit aware at around the 818 to the 818 to 825 level is where I would be a little bit. Again, if it starts stalling out, I'll give a lower high here, but just lock in your profits if you have 2 or 3 up more days for the close of the year. Again, roll stops on the runners. When I say runners, I mean that if you have 10 shares, 10,000 shares, you trim that down by 3/4 and let the rest of them ride and put your stop at break even. Take care and speak to you soon.